Let's go single stock analysis here today. Hey everybody, Serge Berger here. Financial companies, banks, and other similar institutions will typically stand to benefit from a re-steepening of the yield curve. If you look at the screen here and you focus on, let's say, for example, the yellow line on the screen there, that is the difference between 10-year Treasury yields and 2-year Treasury yields. And the steeper that chart goes up the yellow line, the more the yield curve is re-steepening. The reason why that's important for banks particularly is because they tend to borrow money at the shorter end of the yield curve and lend on the longer end of the yield curve. And so it's that yield spread of difference. So if you have a regular yield curve where the short end of the yield curve is lower in terms of yield, and the longer end, that's called a normal term premium, then banks have a good chance of making money just from the regular net interest margin. The problem is when we had an inverse yield curve, and that's what we've had. So I think as we come out of this inverse yield curve, this should be even better for banks. Now, I'm not here to make a broad financial assets, financial sector bullish call. I'm looking at one chart, and this is more from a momentum perspective, an interesting play once it breaks out, if it breaks out, and that is Truist Banks, Truist Financial Corporation. Now, Truist, I like what they're doing from a growth perspective, diversification perspective. So I like what the company's doing in general, but here is what the chart looks like. So this is the chart of Truist. The ticker symbol is TFC, and I think what you can very clearly see is that the stock is starting to, or has been already, making a series of higher lows and marginally higher highs, and it's kind of bumping into this $38, $39 area. They just had their earnings support, so that's out of the way. We don't have to worry about that anymore. The next earnings support is not until July. So I think if there's a stock within the financial space that has it within itself to potentially break out higher, then I think TFC, at least within this segment, is a pretty good fit. And I wouldn't be surprised if this thing can pop, let's say, 10% into the low 40s, would sort of be a first profit target. Now, speaking of bullish moves and ways we can potentially lever them with good risk management, it's something called a poor man's covered call. We are holding a special session this coming week on poor man's covered call strategies. My colleague Brian, excellent trader and analyst, is going to walk you exactly through how that works. I will be there as well, of course, walking you through it, but I think it's a particularly interesting strategy as it relates to setups, kind of like what we're looking at here in Truist. Make sure you join us there next week, down below or on the next screen, and we'll see you there.